Good morning, everybody. Welcome on into today's edition of FreightWaves Now. I'm Kaylee here with Anthony Smith. We have made it to the first Friday of the year, and Anthony, a short week always feels longer than a long week, I feel like.
It does, and you know what? I'm always excited for Friday shows because there's so much stuff going on, and I always feel like we save some of the most fun and entertaining segments for the end of the week. Of course,
are you talking about economy lately?
I am definitely talking about economy lately, and Alan Adler, who we'll have on a little bit later with Truck Tech, and of course that economy lately will be there. But first, we have to get to our top story of the morning, which is about locusts and seeing their opportunities in Mexico for e-commerce. We have our Borderlands writer Noi Mahoney to talk about Mexico's growing presence in e-commerce. Noi, thanks so much for being here this morning.
Thank you for having me. I thought I was the only one having a very long week.
It's that like holiday into the short week. It always feels longer than it is. But Noi, so let's talk a little bit about the e-commerce side of things. Obviously, we know that Mexico is no stranger to a growing trade partner when it comes to things like autos and manufacturing, but now e-com becoming a pretty big player there as well.
That's correct. I'm seeing more and more companies, move into Mexico are seeing the value of it as a high growth market. And the latest company is Locust, a software provider, specifically software for last mile deliveries. And Locust is expanding. They're already in Mexico. They have customers there, but they want to expand, their customer base. They want to get actual, boots on the ground, as they say, have more of a presence in Mexico, to take advantage of the growth of the e-commerce market in the country.
And Noi, with that growth, do you see this just really being a growing demand for labor within Mexico that could draw some potential U.S. expats over to the country, or do you see this really as more of a growing force within the country itself?
I think it's a growing force within the country itself. The biggest e-commerce player, or one of the biggest in Mexico, is a company from Argentina called Mercado Libre, and they see Mexico as one of their most important markets. I think they let out a report about a month ago that in 2022 they invested a total of $1.5 billion in the country, and that was to build infrastructure such as warehouses, fleets, beef up their fleets. So you see these, large companies that want to move into Mexico and see it as all the potential with people continuing to buy stuff online there.
So it's interesting that you bring up Mercado Libre because they've kind of billed themselves as the South American Amazon, right? Like they're trying to be that global e-commerce marketplace. Obviously, we know that Amazon now has this massive global presence, and they are involved in everything logistics from fulfillment now. They've got their own fleet. They're doing trucking. They've got air cargo, all of that and more. When we talk about Mercado Libre and seeing them expand in Mexico for that good opportunity, is that maybe that kind of first step before we see try to expand further into North America, across the border into the U.S., maybe into Canada as well?
That's a very interesting topic, and I've asked people that question before. Do you see Mercado Libre, looking at the U.S. and seeing, potential, the idea of moving here and trying to compete with Amazon? And I can't really get a solid answer out of people. Some say maybe, but they say that, Mercado Libre, the leadership with that company is very strategic and cautious. So we might see that. I just, if we do, it might be a few years, maybe, I would say at least 5 years away from that, if that does happen.
And Noi, with the state of Mexico now, do you see it as a really strong launching pad and foundation for the growth of e-commerce within the country, or do you see that there might be some changes needed in order to really kind of push that growth forward?
What's interesting about Mexico is I asked some of the people, why is e-commerce growing so much just among, the general people like us? And one of the big answers, I spoke to someone a couple of months ago from the Mexican Online Sales Association, and they told me COVID was actually the pandemic was one of the big changes to consumer spending habits in Mexico. And people really, started just like here in the United States, people were buying stuff, from their living room. and they saw the value in that. They don't have to go to the store physically, so they don't have to be exposed possibly to the pandemic. They also were able to compare prices better, and get a better deal when they're shopping online, and they can also find stuff that maybe they weren't able to find in that physical store. They were able to find it online instead of having to go to 2 or 3 stores. So people really saw the value of shopping online in Mexico because of the pandemic. A lot of people tell me.
Noi, I know that Mexico is very traditionally and culturally a small business and a maker economy, right? There is a lot of folks, a lot of Mexican citizens who really rely on their hand skills, their trades, the things that they make culturally that are very important to them. And also they create businesses out of that. Do you have any insight on if this swarm of e-commerce taking over Mexico, if that could really be a threat to that kind of traditional cultural economy? Or is there room for them to kind of merge together and almost boost some of those makers by getting them onto an e-commerce platform?
That's a really interesting question. And that was one of the things I sort of talked to with the people from the Mexican Online Sales Association. And they told me that the one of the fastest growing segment for online sellers in their country is small businesses and medium-sized businesses. And it's I think it's a lot of companies like you just mentioned, people who make their own crafts or their own goods and sell them online. And that seems to be a really, it supports a big part of the online, the e-commerce economy in Mexico, is these small businesses and medium-sized businesses that rely on online sales to sell their, homemade goods.
And Noi, with the ongoing talks around reshoring and nearshoring going on within the North American region and definitely within Mexico as a country, do you see this really as a competitive advantage for Mexico, really being able to say, hey, not only do we have the goods that are manufactured here, we can get them to you faster, and that might kind of lead into piggyback off of what Kaylee was mentioning earlier, really kind of being competition potentially for Amazon?
One of the interesting aspects of the e-commerce market in Mexico is that the goods that they buy mostly seem to be coming from Asia. Chinese goods in particular is the biggest provider of e-commerce goods in Mexico, and I think people can say, our customers are buying stuff from Asia, e-commerce, and so maybe instead of having your factory in Asia, you can bring it here and produce the stuff here and be closer to your end customers. But I also see that as an opportunity for the U.S. saying, why are you buying your goods from Asia, your online goods, when you can buy them from us? So there's opportunities for Mexico, for both countries, for the U.S. to take advantage of this and say, instead of buying all your online consumer goods from from China or any Asian country, buy them from us here in the U.S. instead, and it'll help North America better.
And so, Noi, with Locust, putting this back to wrap it all up with a focus on them, any insight on how much this investment they're looking to spend is and what they're kind of really looking at doing? Is it robotics for warehouse fulfillment? Is it robotics for e-commerce fulfillment? What are they looking at actually doing?
They wouldn't give me a dollar figure on how much this investment is, but it's a software investment. They're trying to get more third-party logistic providers, more manufacturers like consumer packaged goods, fast delivery goods, to use their last mile logistics software. And they told me, they're going to be opening physical offices in Mexico if they don't already have them. They're going to have more employees in Mexico, and they want to really, get these courier services, anybody that needs logistics software to finish that, last mile delivery, to become a client of theirs.
It sounds like we'll have a bustling freight tech scene in Mexico in the coming years. Noi, thanks so much for joining us this morning. Any sneak peeks or any stories that we should be watching from you in the coming week, or do we just have to wait?
I've been working on this story about Mexico's answer to the Panama Canal, a project called the Isthmus of Tehuantepec, and Mexico is trying to produce this sort of intermodal service that will help alleviate pressure from the Panama Canal. Or that's what they hope this project will do. So that's one of the things I'm working on.
All right, we'll keep an eye out for that. Thanks for that, Noi. We'll talk to you soon. Have a great weekend.
Thank you. You too.
Right now, we're going to head over to the wall for our first carrier update of the morning.
Welcome into this carrier update. I'm Tony Welby, joined by Donnie Gilbert. Donnie, going to start here looking at volumes, starting to see them tick up, obviously kind of expected as the 7-day rolling average, we lose some of those holiday affected times, getting back into what you would consider more normal.
In between the holidays, you see this kind of upward tick here, which tells us volumes are increasing slightly. So when we come back on Monday, we'll bring this up first and check it out. But we'll actually see what the effect is and where we truly are post fourth quarter, and see what starts out. We want to be 10,000 or above, over and under 10,000. I think we might be a little bit above. You think we might be a little bit under. So we'll see. We need to be above. Now, just because you have a lot of volumes doesn't mean that it obviously helps increase or makes the freight markets better for carriers, but it really depends on the capacity. We want higher freight volumes, but with the markets being the supply of trucks to the markets right now, it's what's really hurting the rates right now. So we almost need this to be at 12,000 or above to really offset all that extra capacity, or we need capacity to reduce itself, which is what we may see, which a lot of people have been talking about. We thought it might be a little bit sooner, but probably here in 2023, we're going to see a lot of people pack up and leave.
Yeah, I mean, you even mentioned, right, over the 12,000 mark. So that puts you back to where we were mid-September. Well, guess what we were seeing in mid-September? There's so much capacity. We were still seeing rates decline in September. So, I mean, that's the concerning part. But, I mean, overall, I mean, you look at this, right? We're only going back 6 months, back to July, and you can see the decline. I mean, even take out the holiday, right? Go to before the holiday. I mean, we were, 10,500, 300, somewhere in that range. Back in July, we were at almost 13,000. So, I mean, you've seen a pretty big decline overall, and that's been what we've talked about a lot.
July was kind of the end of that boom, too. So what goes up must come down. So we need to get back to what would be a normalization, and that's the problem is nobody really knows where that's at. We get with the inflation, and so there's a lot of unknowns that are coming up, and we're going to learn a lot through this next year, which is going to make it now 5 years in a row of markets being just completely different.
Yep.
All right, next chart here. Let's look at OTRI. So I went in through in our OTRI down to 4.94%. Concerningly, it dropped below 4% before the holiday. Did not get all that high, did not break 6% during the peak. And we're already headed back down. And how low will this go? We have both reefer declining at 6.88 and the regular drive-in in green here down to 4.72 already.
Yeah, we brought this up yesterday, right? But we had flatbed on there. So these declines on the reefer and van side didn't look maybe as substantial because flatbed had come down so much. But you're seeing every market is in this, the rejection rates are on the decline across every mode.
Yeah, so when we come back, we'll look at a few other things, but it's going to be a rough year starting out so far.
Absolutely. Well, Donnie, thank you so much for this update. We'll be sure to check in with you again a little later. Right now, we'll hand it on over to Kaylee next.
All right, guys, thank you for that. We got our first check of headlines for your Friday morning. LTL provider Roadrunner is upping its service once again, adding faster service times and expedited lanes for some of its areas. The carrier says that it will reduce service times on several lanes and launch one-day service from Chicago to Southern California. The upgrades include changes at 30 origin and 27 destination terminals, eliminating line haul service on the railroads. All Roadrunner shipments will be performed via truck 100% of the time now. The Chicago to SoCal lane is still priced at its normal LTL rate, even though it qualifies as an expedite offering. Container shipping lines navigated a topsy-turvy world the last 2.5 years, and strategies to manage that were mixed. However, some of those liners came out on top, while others took big hits. Alphaliner has released its overview of 2022 fleet changes, showing that while aggregate market share of the top 10 world liners has stayed steady, individual liner changes were intense. MSC gained the most capacity last year, surpassing Maersk as the world's largest carrier, adding over 800,000 TEUs to its fleet. COSCO was the biggest loser, reducing its capacity by 2.1% in 2022, after dropping at 3.2% the year before. And global logistics provider Flexport has named another former Amazon exec to its leadership team as co-CEO Dave Clark fills out the ranks. Teresa Carlson has been named president and chief commercial officer, who will be in charge of sales, marketing, and communications. Carlson served in a vice president role at Microsoft before and was also president and chief growth officer at Amazon Web Services, where she founded and led the worldwide public sector business for over a decade. You can find details of these stories and so much more on FreightWaves.com and our new FreightWaves app. And if you're watching us on YouTube, don't forget to give us a like and subscribe. For the full FreightWaves TV experience, you can move on over to tv.freightwaves.com. We're going to take a quick break, and we'll be back with our Truck Tech segment and a check of weather. The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
What does this have to do with freight? Well, I'm glad you asked. People are wondering what's going to happen with inflation. Is there going to be hyperinflation? When is hyperinflation going to be here? When is there going to be inflation? What's going to happen with inflation? Inflation. This is the sexiest topic within the economy right now.
Welcome back to FreightWaves Now. It's time for our first check of the weather this morning. That major storm impacting the California coast is slowly starting to move up the west coast, but still bringing some pretty intense impacts everywhere from Oregon down through the northern parts of California, even down into the LA and San Diego areas in Southern California. Let's check it out in Sonar Critical Events. We've got the satellite imagery up right now, and you can see that kind of swirl shape that's here just off of the coast of Oregon. And this right here, this bigger piece of clouds, this is that atmospheric river. So we've got a really intense stream of moisture and some really strong onshore flow going on here. That's what's bringing the heavy rainfall, the high winds, the very high surf right now, and the dangerous conditions all the way through California, really up from the Eureka area down through San Francisco into Salinas, Monterey, and like I said, even down into the LA and San Diego areas. We did find a video on TikTok earlier today of some of those waves. This ended up being what would be honestly close to be probably a 25 to 30 foot wave. They've got it measured at 45 feet. I think that's a little dramatic, but This video does show at the very, very end of it that this wave came and completely took over the beach and really got those guys. And basically, if you are in California right now, this is not a smart move. Stay away from the coastline. Huge, massive waves taking over, causing soil erosion, washing out roadways. US 101 up in the northern parts of California and US Highway 1 down the Pacific Coast Highway are already seeing spots of erosion in places where the road has been washed out. So it is really just a difficult and dangerous situation out there for those folks across California. The rain is expected to let up a little bit today, but the onshore flow will continue with those really strong pounding waves as well as those high winds, so the danger is not quite over yet. We'll talk a little bit more about what's going on in California and across the rest of the country coming up in the rest of our show today. Right now, we're going to toss things over to Isaiah Buchanan. He's got our first check of the social roundabout.
Welcome to Social Roundabout, everyone. I'm Isaiah Buchanan, and we're starting things off talking about a car that has the ability to change colors. So the CES show is going on over in Vegas right now, and BMW has displayed this new car. It's called the BMW iVision D. Now, D is spelled D-E-E, and it stands for Digital Emotional Experience. So they're saying this technology is emotional rather than artificial. The car has the ability to change colors, as you can see right there. And you can change the color of the car based on your mood, so you can change it to red if you're mad or anything like that. Apparently the grille and the lights can show different shapes and hues of light, and that is supposed to simulate different moods or reactions. The interior display can project images onto windows, and that feature, the interior display, is something that BMW is really wanting to push starting in production in 2025. So a really cool video of this concept car. Now, it's still a very long ways off, but I think it's a really cool concept. I mean, potentially having a different color car every day you go out, making people think that you have multiple cars. Hey, something to think about. Also, switching things up a little bit, I found this next video courtesy of my great friend Donald Gilbert. Take a look at these cops and how the unorthodox way that they found a man and arrested him on the highway. Can you imagine just being on the highway and just driving by and seeing those officers arresting that man? Like, I would be stunned. That's when I would definitely do the whole rubbernecking thing. I try my best not to, but sometimes when something like that's happening, you got to take a look. Kaylee, Anthony, what do you guys think about that?
Gotta be resourceful, you know?
I'm just stuck on that car changing colors. If I could get away with a crime, not incriminating myself, I'm just saying if I could,
You know,
it would definitely be a high-speed chase or bank robbery. I just think from the movies it would be so fun.
I'm not gonna lie. There was a riding lawnmower on the back of that trailer where that guy ran from. I was half expecting the cop to hop on that riding lawnmower and, you know, take it out that way. But that was a close second.
Yeah, I think both of those segments really could be from movies, and I'm thinking I would use that first BMW car for my getaway driver. So.
Should we also give a shout out to Isaiah for the fresh haircut?
Oh, I am loving the haircut.
There you go. All right.
And you as well, Kaylee. Next, we have Alan Adler with our Truck Tech segment for this morning. Alan, thanks so much for joining us.
I told Isaiah that he got his money's worth at the barber. He really did. Looks good. Looks good.
See, you guys are much nicer than me. I just told him he lost 4 inches in his height.
Well, Anthony, I think what you need in that BMW is invisibility, because that is your getaway car, huh? Yeah.
That's true. Hopefully it's not like the Wonder Woman jet where you can just still see me in the car and I'm just kind of floating there.
Exactly. Defeats the whole purpose, right?
Alan,
But,
so
anyway,
let's dig into Truck Tech today. And nice to see you as well.
What's in Truck Tech?
What's in Truck Tech? Are we talking about mood-changing trucks?
Nope. We're talking about lingo, as in linguistics. No, we're talking about different terminology. Briefly, anyway, to get into the story, there's a term that's being thrown around quite a bit now called feature complete in autonomous trucking. And what that means is we are basically done with the things that we're going to do. We just need to continue to test and validate and test and validate. and ultimately, in a year or so, launch driverless trucks. That doesn't mean in wide numbers or big numbers. It just means that we'll be able to commercialize. So this morning we're looking a little bit at Aurora Innovation. Obviously, we write about them, because they have the partnerships with PACCAR, Peterbilt, Kenworth, as well as Volvo, and are working on their trucks to install the software packages and all of the things that lead to ultimately redundant operations, which are important and necessary when you don't have a driver in the truck. I had a chance before the end of the year to talk to Sterling Anderson, who's one of the co-founders of Aurora and their chief technology officer, about what's happening. And he said that, as they get to their 5th version of beta, and every one of these numbers, just like on your iPhone or your Android, your software gets a new number every time something has changed. So they're getting close. They have about 2 more rounds of upgrades to do, and then they think they'll be ready to at least test, an autonomous driverless truck. This term came up last May at Too Simple when Xiaodi Hao was the CEO, and he brought it up on the earnings call and talked about Too Simple being feature complete. What that means essentially is the same thing. They have everything in the truck that they need. It doesn't mean that they're done. It just means that, kind of as I say in the newsletter, pencils down, we're done here as far as adding new things. So that's really the lead item, talks about that a little bit. And then we go into yet another segment on Nikola because, well, we can't help ourselves. They're compelling, right? And Nikola, before the end of the year, went to the debt market. They're selling debt, basically $50 million worth directly, kind of skipping the intermediaries and trying to raise money. I mean, their stock price is just above $2 now. It's really sad what's happening over there. And so, I think the viability of the company is in question. Very short runway financially, and they're doing everything they can to keep things going. So even as they make these announcements that are impressive on hydrogen and partnerships and all the things that, are legitimate, they have to keep a mindful eye on the balance sheet, which isn't in great shape.
So, Alan, any indication on why that balance sheet isn't doing so hot? Like, I feel like we had, of course, the drama with Trevor Milton, and that kind of went by the wayside. We had some good news, and it seemed like they were actually making good on what their promises were. They were delivering some trucks. They had a little bit of a safety feature that they went ahead and fixed, but they kind of moved through that blip. What's going on to actually now see the issues on their balance sheets?
Well, it's very expensive, as you know, Kaylee, to develop autonomous technology. And so, terms like, we don't get into this, but Anthony, you'd be familiar with, cash burn and things like that. These types of things are really what's going on. And, they're running through money pretty quickly as they continue to develop and ultimately, finish building the plant in Arizona and things like that. Their goal is to keep 12 months of expenses in-house. But they've had a couple of setbacks, one of them being, a big surprise when they bought Romeo Power, the battery supplier. They found out that, Romeo had been, discounting the batteries that they were selling to Nikola, and therefore, by about $100,000 each. And so as Nikola now is the owner of that technology, that's a good thing, right? But the bad thing is they've got to sort of, patch over, if you will, the shortfall that comes from that. So as they build these trucks and sell them or release them, they're not making money. In fact, they cost way more to build. I don't say exactly how much, but they cost more to build than they do to sell. So they're slowing production a bit, because every one you build, it costs more. So they just need to get through this very difficult financial period. Hopefully they can do that. But it's right now, there's what appeared, at least to me, to be some desperate things going on just to get money in to pay the bills.
And Alan, with your first story around Too Simple, of course, looking at autonomous, it's very much early days still. But do we ever see any type of runway for different types of platforms for packages being sold. So for our premium package, you get our advanced safety features and alert settings and safety settings, and then you have your basic package, or is this also new that we're likely just going to have what is government mandated and what's the most safe coming out?
Yeah, Anthony, over time, safety technology has sort of been a building block kind of thing. Some of the technologies that underlie what we call level 4 or high autonomy driving basically start down in different levels. The government actually has numbers for them. That's why when we refer to level 4 kind of casually, it has a meaning. It means it's high autonomy. There are safety features like lane centering and adaptive cruise control and things like that are on more and more standard trucks today. Daimler has a package. Daimler Truck has a package for it. Bendix Wingman Fusion is a very popular fused technologies that do numerous things like automatic emergency braking and some of the things that are critical to higher forms of autonomy. So they're already making their way out into the market now and are becoming more mature. If you look over at Plus, for example, which has a level 4 autonomous system, but runs it sort of in the background, call it shadow mode, if you will. They're focused on turning on, if you will, as many technologies as they think they safely can without it, without the truck actually, doing the full driving itself. So there's a mixture of things that are happening out there. We focus so much on this level 4 question because of the sort of the horse race of it, of who's ahead this week kind of thing. And that's something that Sterling Anderson told me. He said that it's not helpful to anybody. He said, because every announcement tends to do more confusing of people than it does clarifying. And I can't say I disagree with him, but we're still going to do what we do. So.
Suss out between the lines of the jargon, right? Alan, of course, we know that your show, Truck Tech, launched this week. Give us a little bit of a rundown. How was it? And then what are you looking for next week's show?
Well, I'm much more interested in hearing what others think than what I think. I think it was a good start. I think we, obviously had a great guest in John O'Leary. He was terrific. And actually, one of the neat things that happened is when I asked him the prediction question, which everybody will get for a little while as we're at the start of the new year, he didn't surprise me with his answer, but what he said about a pretty robust Class 8 truck market next year ended up being very helpful to our equipment story yesterday. So there's all kinds of value here, both for the viewer as well as for our reporting on the industry. And, again, having, the top guy at a company like Daimler Truck as your first guest is a really cool thing. It doesn't mean it's better than next week's guest, which is Rebecca Brewster from the American Transportation Research Institute. We did confirm, Kaylee, because you asked earlier about Alex Rodriguez. He'll be on the 25th, which will actually be our first live show. We've had to do some taping. We don't think it looks like it, but we've had to tape initially. But the idea is to do this live and really strive for conversation, which I feel like we're getting there. We only have one done, so let's keep going. But we'll take anybody's feedback, especially you guys who do this every day. Helpful to hear any input that you might have, how we could do this better. I'm doing a better job of staring at my camera this morning, for example, and not looking around and doing other things.
Well, Alan, I am excited. It sounds like you got the show started off on a high note, and it's going to be an amazing journey, and I'm excited to be along there with you. Thanks so much for joining us this morning.
Thank you guys very much. Have a great weekend.
Have a great weekend as well. And of course, go subscribe to Alan's newsletter, freightwaves.com/truck-tech. And you can catch Truck Tech, the show, on Wednesday afternoons right here on FreightWaves TV. We're going to take a quick break. We'll be right back in just a few minutes.
coming to an event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we've brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
Hey everybody, this is Thomas Watson, enterprise trucking carrier expert here at FreightWaves, telling you about my show, Loaded and Rolling. Now, it involves trucking topics for large carriers and even small ones that wish to be large. Anything that impacts trucking, you can get it there. You can catch us every Tuesday at 1 p.m. Eastern on tv.freightwaves.com. We do it live.
Welcome back to FreightWaves Now on this carrier update. Donnie, going to start here looking at lead times. We've talked about it a few times just because it paints a little bit different story than what you're seeing on the rejection rate front, kind of showing what shippers are facing or their perspective of what's going on in the market.
Exactly. So when we look at tender lead times, it's how are shippers reacting to the current market conditions. And when we see lead times go up, it kind of tells us that shippers are under a little bit of pressure. Maybe they're willing to pay more. And right now, everything's trending down. They're kind of going back to normal, which means that they're not under pressure and they're not going to be forced as much to pay the higher rates. So just a quick look at this. Just kind of want to show it here. Within a few days, they'll be back to where they were before the holidays. But, you know, as we see this normalize, then we can expect that they're going to be pushing spot rates, contracts, contracted rates downward.
Yep, absolutely.
All right, next chart here. WRI, one of our favorite charts here, except there is absolutely no blue on it. Now, the other day, we were looking at a spike in Seattle, Detroit, Cape Girardeau is normally in that Memphis market area. It's normally pretty strong, but all these are in red right now. So instead of looking at this map right now, Tony, that's basically all white, I want to go to the next chart here and break it down here by the numbers. So this is the same exact WRI chart. I've got it sorted by the value, where this is the highest value and this is the lowest value right here. So on top, Atlanta, but it's only a 2.58. We want to see which markets are 4 and above or -4 and below. We have nothing over here that's over 4. We have a lot that are in that 2 range. Fargo, North Dakota, which is a very small market. Sioux Falls, South Dakota, very small market. Shreveport, Louisiana, not a significant market. Elizabeth, New Jersey, those up there at 1.49. But no significant change, though, in that market. So we don't really see anything on the upward side that's a significant impact and change.
Yeah, in this case, you're seeing rejection, I mean, in this instance, you're seeing rejection rates move up a little in these markets, but not enough to trigger anything that, hey, this is any significant, this is where you need to like push your rates higher. They're starting to be, but it's just not there yet.
Yeah, but on this side, we see where we saw some that are peaking a week or so ago. We see Detroit, -17. Seattle, -10.02. Grand Rapids, -7. Cape Girardeau, -7.3. Toledo, Ohio, -6. Milwaukee, -5. And then finally, we're dropping below 4 with Winchester, Virginia at -3. So we see a lot of significant changes in the negatives, which means these markets are deteriorating rapidly.
Yeah, so I mean, you probably had a combination of, if you look at where they are, I mean, outside of Cape Girardeau, you're across the Midwest and in the northern part of the country. So you've got colder weather that affects this, right?
Yes.
But you've also had holidays that were affecting this. So this is kind of signaling, hey, capacity's coming back into these markets after the holidays, especially this week where you're seeing, is that week over week change in rejection rates and OTM, or outbound tender market share, right? So seeing this decline signals, hey, things are I don't want to say they are kind of getting back to normal. Where we saw the spike, that's probably really holiday related.
Yeah, and so give it a few more days. Monday, Tuesday next week, we will view this again and see if we've gotten back to, if we see any more changes that have really shown that we have normalized and we're coming down off that little holiday peak that we saw.
Absolutely. Well, Donnie, thank you so much for this update. We'll be sure to check in with you again in the second hour. Right now, hand it over to Kaylee and Anthony.
Ready, guys, thank you for that. We're going to welcome in our next live guest. We've got John Kingston, our editor-at-large, here with us to talk December's employment numbers. John, thank you for being here. Let's talk about how we put a wrap on 2022. What did December look like for truck transportation jobs?
I thought it looked mixed to mostly lower on just an outright basis. The number of December seasonally adjusted jobs were in the truck transportation sector were up 2,100 from a month ago. But the November number was revised down, and the October number was revised down. And so all in all, you're only up about 100 to 200 jobs from where we were in October. The other thing is that while economists always look at the seasonally adjusted figures, a lot of them will caution you don't ignore the not seasonally adjusted figures. They were down like about 6,000 to 7,000. Let me look at my numbers here. And from there, what they do is they take the not seasonally adjusted numbers and then they mix it, they kind of bring their seasonally adjusted algorithms to it to get the seasonally adjusted numbers. They were down quite a bit, and there were also October and November revisions that were down quite a bit. So I think overall it kind of showed a market that, an industry that's really peaking in terms of employment levels.
John, it was definitely a mixed bag across the board. I mean, towards this time of the month, we always get payroll updates, job openings, quit rate, participation rate, the unemployment rate, the initial jobs claims. It all kind of comes at once. Throughout all the reports, was there any overall trend that you saw? I know from my standpoint, it definitely showed that there was still potentially some confidence in the jobs market from the consumer side, with the quit rate still pretty elevated. But is there anything that you're seeing in the underlying trends?
No, as I said, I think flat to lower. When I look at the numbers, that's what I conclude. Let's remember that December was the month in which maybe there was going to be a rail strike. I'm not sure how that would have affected truck hiring. On the one hand, you could think that maybe they'd hire some more drivers in anticipation of demand increase. On another factor, you could say, well, this is going to wreck the economy, so maybe you hire less. So I'm not really sure. Now, as far as adjustments, this is the last report under kind of these baseline numbers that they update every year. If you remember last year when the February report came out for the January numbers, there was a massive revision in warehouse workers, and warehouse workers suddenly became more plentiful than truck drivers. That comparison has always been kind of made. And right now, warehouse workers remain significantly above truck drivers, above truck transportation jobs, not just drivers. And that's really because of the big revision that was done last year. Next year's numbers will again have the big revision. So I think, that's, we're already kind of looking forward to that, to seeing if that resulted in anything. I know that there's some shifts in the e-commerce categories, which I need to look into. I've got 4 weeks to get myself up to speed on it. But that's the one big shift there. The other thing I wanted to mention was that warehouse jobs were down again, though not as much as they've been down. They're down like 60, 70,000 jobs over the last several months. They were down about less than 3,000 jobs this month. So maybe the big bloodletting in the warehouse sector has kind of stabilized.
So, John, I know that we've had a lot of conversation about financially, it kind of looks like we're in a recession overall, but the interesting part was that the unemployment numbers weren't reflecting that kind of recessionary tale. Does this kind of pull us back closer to where we're saying, okay, maybe now the jobs market is starting to come back in line, saying we possibly are headed towards a complete recession instead of more of just a financial recession?
Well, I think I've said on the show before, this is the damnedest recession I've ever seen. Unemployment below 4% and regularly monthly job increases of 200,000 or more. I think most of the forecasts of recession are that there will be one and that it will be mild. and that it probably is already built into the stock market. So, we're probably going to head toward a downturn in employment levels in truck transportation. But certainly it's been hanging in there despite all the projections, beside the drop in rates, beside the drop in volume. The numbers in the sector are hanging in there. Now, remember, these are not just all over-the-road 18-wheeler jobs. So kind of local deliveries, which might be benefited from e-commerce, whatever, they're in there too. So also remember too, I think we've talked about the fact that it's been tough on the road for independent owner-operators. They don't have a nice fuel surcharge to put their fuel costs down to the shippers. So a lot of them maybe have been joining to be company drivers. That would show up in the data as new hires. That would not necessarily show up anywhere else. So that also may be keeping these numbers pretty healthy.
And John, as you look at the jobs market overall, do you see this overall job market strength, their seeming strength, as more fuel potentially for the Fed to continue their interest rate hikes going into the new year?
I don't know. I'm not a Fed watcher, so I wouldn't say it. But I mean, they only went up 50 points last time. So from everything I've read in the 45 minutes that these numbers have been out, I guess an hour and 15 minutes that these numbers have been out, this is generally being viewed as kind of a little bit of a Goldilocks report, a nice gain in jobs, unemployment rate holding steady, and certainly nothing to indicate that inflation is fueling. It's been interesting. I saw a story the other day about consumer confidence and people feeling better about the economy over the last few months. Well, really, there's nothing different in the economy than there was a few months ago, except for one thing, one very big thing, and that's the price of gasoline. And it is really incredible how many people's views of the economy are totally hardwired to the price of gasoline. I don't think everybody's financial position is obviously a little better when the price of gasoline goes down. But the price of gasoline as a percent of most people's disposable income has been falling for years. That hasn't changed. Fuel efficiency is more. Now you've got people who maybe only go to the office 3 days a week. And yet, because the price of gasoline is down so much, it's making people feel a lot better. I think it's kind of crazy. I think it's exaggerated. This is not to say about diesel, where you're talking about the second biggest cost center after labor. But with gasoline costs down, it just makes people feel better. And that could be a sort of anti-recession step.
It's interesting to frame it in that kind of way. I never really thought of it like that. But John, when we're talking about full year results, will we get a full year employment report, or will that have to wait, or does that even exist? It's just kind of a month by month basis.
No, it's a month by month thing. I mean, I'm not even sure what you would put into a full year report. Months later, they'll come out with kind of revised figures on the number of people in individual sort of subsectors of the total sector. But by the time that comes out, it's so much later that nobody really cares about it. So, but yeah, this is it. This is basically it. It's a month by month number at the end of the year. I mean, it's kind of fun to go back end of the year compared to the beginning of the year. As we know, the truck transportation jobs at the end of the year rose every month except I think 2 in 2000 and in 2022. So we know that there's more truck transportation jobs at the end of the year than there were at the beginning.
And John, it's always great having you on, and I'm excited to have you on so much more throughout this year. If people want to catch more of your content, especially Drilling Deep, how is that looking in the upcoming months here?
Well, Drilling Deep, let me get the name of the guest today because he was very good. That'll drop later. He's Paul Adams. He's the CEO of Roadex. Roadex is a Michigan-based company that provides all sorts of services to independent owner-operators. Drilling Deep, you can see, just go to FreightWaves TV and click on shows, and it'll be there. And that interview today drops, I believe, at 2:30. It was a good one. He's got a good perspective on the outlook and the current condition of the owner-operator fleet.
All right, John, thank you so much for joining us today. You can catch Drilling Deep this afternoon, and have a great weekend.
You too.
Right now, we're going to take a short break, but we'll be right back with more FreightWaves Now.
Welcome back to another edition of Check Call. Check Call. Check Call. Check Call.
Let's go.
Nobody works for free, so why should we be expecting our drivers to? Okay, let's just get it together now. What are some of those proactive steps that you can start taking now? For myself, I would like the Earth to still be here for a little bit longer, but you know, is a hot dog a sandwich?
Oh, okay. Is pizza an open-faced sandwich? It's bread.
I have been ready for this question. I've seen the show.
We're all in this together.
Thanks for making me hungry. Now I want a hot dog.
You're welcome. Catch episodes of Check Call Tuesdays at 12:30 on FreightWaves TV. Keep up with all things Check Call on freightwaves.com/checkcall. See you on the internet.
What does this have to do with freight? Well, I'm glad you asked. People are wondering what's going to happen with inflation. Is there going to be hyperinflation? When is hyperinflation going to be here? When is there going to be inflation? What's going to happen with inflation? Inflation. This is the sexiest topic within the economy right now.
Welcome back to FreightWaves Now. It's time for our second check of the weather. Sticking out with California as we're talking about the pretty intense Pacific storm system impacting the coastline. We showed that video earlier of those massive waves hitting the coast. And some places waves have been upwards of 45 to 50 feet in some places. So we're talking about a lot of coastline erosion with some really dangerous driving conditions along those coastal highways. The Pacific Coast Highway is closed in several places as the road has been completely eroded and washed out so far. Intense flooding all the way from Santa Cruz to Monterey up to San Francisco, and really just dangerous conditions out there as well. Let's check it out in Sonar Critical Events. We put the radar on right now, and the rain is starting to let up just a little bit, but we still have a lot of onshore flow going on. So there are still flood watches in place for those coastal areas, and flood watches up into the mountains through I-5 into Sacramento and down south into the San Luis Obispo area as well. Really, the biggest area of impact right now is going to be that U.S. Highway 1, that Pacific Coast Highway that goes through Monterey right along the coastline. From Monterey Bay up to Santa Cruz, they're having some pretty intense damage there. So some places up the Pacific Coast Highway from Santa Cruz through Monterey have been completely washed out. And then up to San Jose and San Francisco, we've got sinkholes, we've got mudslides, really just a dangerous situation out there across everywhere, especially in the foothills of those mountains. Further out to the east in the eastern mountains of California, we've got some snowfall going on. Really nothing that is impacting driving conditions through those interstates, I-80 from Sacramento into Reno right now, but we could be seeing some visibility issues as well as some slick roadways there as that snow continues to fall. Winter storm warnings in place just for that thin stretch of I-80 between the mountains and Reno, so just be cautious if you've got anything moving out there today. Same thing moving north-south on Interstate 5. Driving conditions could be a little hectic out there. We'll continue to talk about the weather coming up later on in the show. Right now we're going to toss things back over to Isaiah for our next social roundabout.
Welcome into Social Roundabout, everyone. I'm Isaiah Buchanan, and we're starting things off talking about a car that has the ability to change colors. The Consumer Electronics Show is going on out in Las Vegas right now, and that's where BMW displayed or unveiled this new concept car called the BMW iVision D. Now, D is spelled out D-E-E, and it stands for Digital Emotional Experience. So this car is equipped with innovative e-ink technology, and it has 240 panels, and those 240 panels, as you see, have the ability to change color. They can do up to 32 different colors, so there's endless possibilities of patterns or colors that you could do for your car. So the grille and the lights on this car can actually change to show different emotions, whether it's approval, happy, sad, mad. It's kind of a really unique thing that BMW has come out with for this car. The interior display can project images like your car's avatar onto the window when people are walking up to your car. They also want to incorporate that, BMW wants to incorporate that feature in production starting in 2025. Now, one of the really cool things about this car is that one of the safety features, so BMW wants people to focus on the road more, and so instead of having a dash in the front of you or having a radio all in front of you, their entire windshield is just an enormous digital display. And so that's helping people to keep their eyes on the road a little bit more, trying to make the road a little bit safer. So BMW, like I said, concept car, really cool. Hopefully they can continue to work on that and eventually it can hit the roadways at some point. Now, I want to switch things up just a little bit. Sometimes it's difficult for cops to chase people down, and sometimes they got to do it on foot, and they do it by car, or sometimes you just got to do it any way you can. Take a look at this video at some cops pulling somebody over on the highway. Got to stop the bad guys any way you can, right, Kaylee and Anthony?
I wonder if that biker receives like an honorary cop award for that.
That's it. You know what? I was also thinking from that segment, I would be an awful police officer because like I would just want to like chase someone down like, all right, got you, off with a warning, stay out of trouble.
We know you were a DN. All you got to do is just
I just want to tackle somebody, and it's like, all right, you're good to go.
Then you're good to go.
Yeah.
All right, thanks for that, Isaiah. We'll talk to you coming up in our second hour. We are just about a week away from our next virtual event here at FreightWaves, Anthony, and it's going to be a good one.
That's right. It's the Sales and Marketing Summit, and I'm excited about this one because the way we've been selling over the last few years is changing. It's no longer from just sitting on the golf course trying to close deals. There's a lot more transparency that's needed, and this is going to be a great summit here, and I'm excited about this one.
You mean I can't rely on cold calls to get me through?
I don't think that spray and pray method is going to work anymore.
Oh, man. You know, I hate that. But, Anthony, what I do love about our virtual events is that if you get registered, you have the chance to win a prize. So, free registration, of course, for our virtual events. Make sure that you head on over to live.freightwaves.com and get in for this one. You still have plenty of time to do that. And while you're there, you might as well sign up for our upcoming virtuals as well, because, as I mentioned, they're free
all year long. And stay tuned because we have more content coming up right now. Enjoy this Freight Market Update.
Coming to an event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we've brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
Good day coming.
Welcome back to FreightWaves Now on your Friday. It's time for a 10 a.m. look at your top stories. Container shipping lines navigated a topsy-turvy world the last 2.5 years. Strategies to manage that were pretty mixed. However, some liners came out on top while others took big hits. Alphaliner has released its overview of 2022 fleet changes, showing that while aggregate market share of the top 10 world liners stayed steady, individual liner changes were intense. MSC gained the most capacity last year, surpassing Maersk as the world's largest carrier and adding over 800,000 TEUs to its fleet. COSCO was the biggest loser, reducing capacity by 2.1% in 2022 after dropping it 3.2% in the year prior. Global logistics provider Flexport has named another former Amazon exec to its leadership team as co-CEO Dave Clark fills out the ranks. Teresa Carlson has been named president and chief commercial officer, who will be in charge of sales, marketing, and communications. Carlson served in a vice president role at Microsoft and was also president and chief growth officer at Amazon Web Services, where she founded the worldwide public sector business for over a decade. ShipMatrix has released its report on peak season parcel delivery numbers, and the big three carriers performed well during a peak season that was fairly flat. UPS hit its delivery commitments 97.5% of the time between Black Friday and Christmas Eve. FedEx came in at 95.2% on time. Postal Service hit 94.3%. The performance was better than 2021 when capacity was tighter and demand was stronger. Last year, FedEx struggled with worker shortages at its hub operations, which dropped their on-time numbers into the 80s. However, the parcel sector was completely impacted by the winter weather during Christmas week, with 10 million parcels not arriving by Christmas Eve. Those numbers were not included in performance since the circumstances were out of carrier control. Class 8 truck orders look healthy headed into the new year, according to Daimler CEO John O'Leary. He said no one was able to satiate the demand seen in 2022, and that will continue into this year. New bookings slowed in the fourth quarter of last year after a record 53,000 orders in September, but backlogs remain elevated. However, those backlogs will be reduced enough that they won't impact production output for OEMs. O'Leary also said that with the supply chain issues easing and companies finding more parts than in previous years, they're getting those builds done. And Lightning eMotors has released a new product designed to help fleets plan out when to electrify and how to sell their older vehicles. The digital solution will be free and gives recommendations based on fleet operator input data, like route distance, payload, and number of passengers. Fleet planners can also include a distinction for passenger versus cargo vehicles, input the terrain type, average weather conditions, dwell time, and shift duration. The system will automatically make recommendations on which vehicles to get rid of out of a fleet and when, and then which electric vehicles would be best to replace it with. And you can find details of these stories and so much more on FreightWaves.com and our FreightWaves app. And if you're watching us on YouTube, go ahead and like and subscribe to stay updated. Head on over to tv.freightwaves.com for the full FreightWaves TV experience. We're going to toss things back over to the wall for our next carrier update.
Welcome into this carrier update. Donnie, we touched on a few of these markets that we're going to take a look at. This one being Detroit. We looked at it on the weighted rejection index, saw those rejection rates moving a lot lower. We can see it right here in the green line.
Yeah. So on the WRI, this was like negative 17. Well, why? Well, if you look at volumes are actually increasing. It's the rejection rates, and this is where it peaked. And then, of course, it got up to over 15%, and it's fallen back down to 6.46, and it fell very rapidly. It was a significant change. There was reason behind it. That's what gave it that negative 17. This is what people need to see. This is how you're able to point out real fast. The next chart here is Seattle. I'm not going to go over Seattle because we're a little bit behind, Tony, so I want to go ahead and skip this chart and go on forward and get into our NTI. The reason I want to talk about our NTI is, Tony, we've actually seen it rebound the last couple of days. I expected this to drop on down in probably by now 260, right around that range. But, of course, it has been a Thursday or Wednesday, Thursday, and Friday. And typically at the end of the week, you see it pick back up. You go back and you look at the NTI, you see a lot of ups and downs. That's why we use, that's the NTID, the daily index. The NTI, we've smoothed it out with a 7-day rolling average. But here the last couple of days, we've seen it pick back up. And, of course, coming through Monday, Tuesday, we might see it drop back down a little bit again. But eventually, as we go through this month of January, we will end with this NTI being a lot lower than what we started at.
Yeah, so it's one of those, it takes a little while for network fluidity and capacity to come back online following the holidays. I mean, this is still a short week, right? I mean, that New Year's Day, the holiday was Monday. So, I mean, you're still in that affected time where capacity is still working. The kinks that have been felt, really, I mean, you look back when this started, back the 20th or even the 18th when it really started to move higher, you're still working through that adjustment. I mean, you're seeing rejection rates move back to where they were, but they're still higher than where they were around this same time.
These carriers are trying to hold their rates up where they were. They're like, no, we need these rates. And these shippers are slowly pushing it back, saying, no, we need to be here. And so they're trying to work it out. Carriers do not have the strength. I haven't looked at our index, the PPI today, but it's going to show that shippers have the strength, shippers have the power, the pricing power, and you're going to give up more in your negotiating than they are. So these rates are going to go down, and they'll slowly push back, not really slowly, semi-rapidly push back, probably a lot faster than what they grew on, back down to where they were before the holiday.
Absolutely. Yeah, so it's definitely something to pay attention to as we move forward. We'll be sure to check in with you again one more time before the end.
When we come back, we'll check out some lanes. I've chosen some fun lanes today, checking out the Northeast and a few reefer lanes as well.
Awesome stuff. Thank you, Donnie, for this update. Right now, hand it over to Kaylee and Anthony.
Alrighty, guys, thanks for that. We're going to welcome in our next live guest, and we've got Peter Rentchler joining us, the CEO over at Metafora. Peter, thanks for being here. It's been a long time since we've caught up, and Happy New Year.
Yeah, Happy New Year. I think it was October when I was last on. We actually had our first baby in November, so that was why I unfortunately missed the F3 event. But was kind of tied up through most of November with getting him settled, which has been a lot of fun.
Well, Peter, huge congratulations on our end, and we're excited for you in the new year, and of course excited to have you back. And looks like we're kicking this year off with a really big story, and that's all around tech and investment and how to go about it.
Yeah, it is, and it's really interesting. I'm not sure if any of y'all were affected by the Southwest issues, Southwest flight delays over the course of the holiday season. I know personally, my sister and her boyfriend and my in-laws were all kind of caught up in the flight cancellation issues and actually ended up having to get rebooked on a different airline. But I think it's a really interesting use case. And the New York Times did an article about how really kind of the major cause, I mean, obviously the weather is what kind of started those flight cancellations. But ultimately the issue is that Southwest had severely antiquated systems and technologies that they had been grossly underinvesting in for years. And that's really why Southwest was so much more significantly affected by the weather the week of Christmas compared to United or Delta or some of the other major passenger airlines. And so to me, it's a really interesting use case as to why, especially as we go into a recession, it's critical for logistics and transportation companies to take a close look at their technology stack and how they're investing in it and proactively invest money to fix their technology and to create better technology stacks.
Absolutely. The situation with Southwest obviously is passenger air related, but moving people lessons directly move over into moving goods, right? And I think, Peter, we talk a lot about how people are like, well, I have this tech. What's the worst that can happen if I don't update it? This is literally the worst that can happen if you don't update it. You end up with people stuck. You end up with flight crews and pilots who are there to do their job, but not able to actually operate to do their job just because they simply can't have the flight numbers entered to literally find the information to take off and go. And it is a use case because the lessons learned translate to anything where you're moving anything. If you're maybe a logistics manager, if you're sitting there watching this and you're saying, okay, what do I take out of this? What is that number one lesson? Is it building redundancy to your tech, or is it just making sure that you continuously update so you never have to go and fight through the antiquated technology?
Yeah, it's a really good question, Kaylee, and it probably to me as is often the case on my responses to your questions, it depends on the size and scale of the business. If you are if you're a $500 million plus $billion, multi-billion dollar transportation and logistics company, and you're not proactively investing in your technology, it's a huge mistake. And so from our perspective and my perspective, I believe strongly that bigger businesses should be looking at where is their weak legacy technology that may be slowing down the operations of the business or potentially putting your business at risk if there is a catastrophic event. Because Kaylee, to your point, I mean, major storms hit and affect logistics and transportation companies all the time. I remember when there were the big storms coming across Texas last winter, and those caused major issues. And there were, drivers run into hours of service issues, and then you have assets that are stuck. I mean, very, very comparable problems. For businesses that are at kind of the middle market and down end of the spectrum, I think it's a little bit more about making sure that you're optimizing the technology that you have and looking for where there may be bolt-on technologies that could be additive, things like a green screens rating and pricing engine, or Project 44 for visibility automation. But then I believe that manual redundancy is more important at the middle market and down end of the spectrum, because the reality is they simply have less money and total budget to invest in technology and automation.
And Peter, as you speak to leaders and executives, what sometimes seems to be the main disconnect when it comes to making that investment in technology? I can only imagine. I know back when I was really heavily consulting and analyst work, there were times where I was using really old and outdated software, terminals, things like that really the leadership just had no idea about. They just know that they wanted their report. Is this kind of some of the things that you see when some people have some resistance to seeing that investment in technology?
That's definitely part of it, is that there's a disconnect between, I mean, I can't tell you how many times I'll meet with executives at a conference or something and they talk about how great their technology is. And then I personally know employees at that business and know how bad the technology actually is at the seat level. That's certainly one element to it. It's kind of the good enough mentality. The other thing that I would say is, the reality is executives are incentivized based on the bottom line are generally incentivized based on the bottom line of their business. And so, the reality is, particularly those at public companies, but ultimately anyone that has any sort of outside capital or is potentially considering selling their business or taking on private equity money or the like, they're incentivized to maximize near-term profitability. And this is exactly what happened with Southwest. And I've seen it happen with transportation and logistics companies where they intentionally underinvest in technology in an effort to pad the bottom line and reduce the and reduce kind of the CapEx and the spend on the business, because ultimately they're worried about their bonus this year, next year, or the performance of the stock this year, next year, and then it'll become kind of the next round of management's problem over time. I do think that the capital markets I think J.B. Hunt has been a really good example around how heavy investment in technology can actually change how a business is valued, and how kind of a long-term technology vision can end up being a positive. But it's also worth noting that if you look at J.B. Hunt, when they started that digital transformation 5 or 6 years ago, I mean, they've had largely the same executive leadership team in place during that time. John Roberts, Shelley Simpson, Stuart Smith, as their CIO, CTO. And I think that they've done a really great job. And so, that's something that I would encourage, board members and executive teams to look at specifically, is kind of what's the planned timeline for your executive management team, and what are they building towards? And what's their incentive? Because from my perspective, technology does take time to generate the ROI. And if your executive team is looking kind of at an exit in the next couple of years, they are incentivized to underinvest in technology.
I think you bring a lot of points up here, and great points. I think this is something that we really have to kind of come to terms with, especially we're looking at what we're incentivizing here. Thank you so much for joining us this morning. And again, congratulations on the new addition to your family, and we look forward to having you on throughout the year.
Thanks, Anthony. Happy New Year. Take care.
Right now, we're going to head over to the wall because we have Kaylee Nix with our next weather update.
Anthony, thank you for that. We talked a lot about what's going on in the West Coast today, but now we're moving eastward across the southern eastern half of the country. And even though it looks like it's kind of chaotic on the radar right now, there's actually setting up for a pretty nice weekend for us here across the southeast, other than what's going on across New England right now. Let's check it out in Sonar Critical Events. Most of the radar pops that you're seeing here across the southeast and the central plains from Kansas kind of southeastward, these are really all precipitation that's being picked up in the high clouds. So none of this is hitting the ground here. It's all just being picked up in those higher elevations in the atmosphere. So we're actually looking at some mostly sunny to partly cloudy conditions across the majority of the eastern U.S. and looking at a nice weekend on tap as temperatures sit pretty seasonable in those mid to upper 50s, possibly some 60s, maybe even 70s for the southern parts of the southeast. Further up towards New England, though, we're looking at more of a messy travel situation and some issues going on with some snow, some mixed precip, and some rain in some places. Looking at possibly some freezing rain going on across central New York and then up into Massachusetts and Vermont. Because of that, we do have winter weather advisories in place from western Maine in through Massachusetts, Connecticut, Vermont, New Hampshire, and into New York. Overall amounts of accumulation are going to be pretty light with this, and they'll move in and out fairly quickly, but we can't rule out some icy spots on those roadways, possibly some travel issues on those smaller roads. Major interstates should be fine as they're normally prepped for this kind of light winter weather here this time of year. Again, that'll be in and out pretty quick, and we're looking at a cool but mostly nice weekend for those folks across New England as well. It's good news because we've got our next major winter storm setting up across the Rockies right now as that onshore flow from California continues to wrap up into the northern parts of the Pacific Northwest. We'll talk about that in our last look at weather today, but right now we're going to take a quick break and we'll be right back. 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
What does this have to do with freight? Well, I'm glad you asked. People are wondering what's going to happen with inflation. Is there going to be hyperinflation? When is hyperinflation going to be here? When is there going to be inflation? What's going to happen with inflation? Inflation. This is the sexiest topic within the economy right now. South, we're back at it again. We're doing interviews. So Marlene, thank you so much for your time today. And we're talking about the economy lately and starting it off, how was your 2022 and are you excited about 2023?
Yeah, my 2022 was great. It was a year of a lot of celebrations, so I was very thankful for that. But it did kind of set the pathway for 2023 in regards to wanting to become more disciplined just so I can top 2022.
And so not too long ago, the recent job reports number came out and we saw that there's still a healthy amount of job openings. Might be a little bit of a slowdown in overall hirings, but have you heard any anecdotal evidence from maybe some friends or colleagues or anything like that around the current job market and what they're finding out there?
Yeah, I've actually heard it's become more competitive, especially for women. I have a lot of fellow businesswomen friends, and a lot of my friends are actually going back to school. They're going to get certificates. They're doing their best to just kind of put themselves above the crowd because it seems like everybody has a college degree now, so you've got to be even more special than that.
Are you looking at any big ticket purchases, a house, car, anything like that in the new year?
Yes, I actually am. I've been looking at a car for a while, so it's really right now just kind of depending on how the first of the year goes. I really want to be careful. I know obviously 2023, it's going to be a great year, and I know this is a little ahead of the game, but thinking of 2024, that's an election year, and that's always very impactful on the economy no matter what happens. So just going to try and play the waiting game for as long as I can so I can make the smartest move.
We're looking at 2023 right now. Of course, thinking about buying a car, used car prices going down, new car prices starting to moderate a little bit. Does interest rates play a big factor in this right now for you?
I think they do. I think they should in anybody. I mean, if you're a smart budgeter, you want to make sure that you get the most bang for your buck. And if you're not looking at interest rates and you're just buying the first option that comes across the table because it's the car that you like, then I'm sorry, you're going to get swindled.
Here with Don and Jack, and as you both know, we're in a new year. One of the big things and big talking points in the last year was, of course, inflation. Don, starting off with you, do you think this is going to be a big talking point in 2023?
I think it's going to be an ongoing target point for 2023 because we've already felt the pinch of inflation hurting our economy and our personal budgets. So it's definitely going to be a talking point of 23.
And Jack, as we look at, of course, inflation definitely still being a talking point here, what role or how active do you think the Fed is going to be in their fight on inflation? Right now, we see Jerome Powell looking to be steadfast right now, increasing interest rates, things like that. Do you think this is going to be something that he stays the course on, or do you think he'll let up sometime soon?
I just hope they do the right thing. I hope they do the right thing so they don't forget about us, the little people. Yeah, I really do. Right. And it's kind of like when you ask me the question, do you want me to lie or tell you the truth? Because if I tell you the truth, you won't be happy.
Oh, please, true.
I actually think that people in Washington, they don't care about us. I just, that's how I feel. Yeah. They're in there for the long time and what they can get for themselves, and we have to suffer.
And so one of the big things that we're looking at, of course, talking about inflation, big ticket items, houses, cars like that. Has any of these impacted both of you in your day-to-day lives? You're looking at maybe a new home or a new vehicle or any other big ticket purchases with interest rates?
I think it's making us be more mindful of preparing for purchases that are larger that we need to be making, as well as the everyday to-day purchases. We're, tightening our belts a bit just because we want to be prepared for what could come if inflation does in fact get even worse. And the world is, at a crossroads, I think, in some ways, in terms of how everything is functioning. And I think we're going to be seeing even more dysfunction in the near future. And I think it's definitely going to impact every purchase, whether it's small or large.
Phil, thank you so much for your time today. Starting it off with, of course, the economy lately. And so 2022 just wrapped up. One of the big topics that we heard all around the year and really before that was around inflation. Do you see this as really being a big talking point in the upcoming year?
Yes, but probably not in the way they want to talk about it because it's a global thing. I mean, it's supply chain, your logistics, you know that. Too many dollars chasing too few goods once that levels out. But it's not just a problem in the United States for sure. I mean, that's pretty much it, but people don't understand that.
We're seeing Jerome Powell really looking to stay steadfast on interest rates to fight inflation. Just like a shot in the dark here, your expectations for the direction for interest rates going into the new year?
Up, just to ease the pressure. I mean, the housing market got really out of control, and now that's pulling back. Hopefully not like it did back in, the last big bust, 10 years ago, whenever that was. I can't remember, but I think they'll, they should just stay the course, see what happens. It takes time. People don't understand it. It's a wave. We're on the top of the inflation wave now, so people don't understand it. I think people they've gotten away from understanding it's supply and demand at the end of the day, the old supply curve, and people don't get it.
Do you think that the U.S. consumer, even though that the job market seems to be somewhat strong right now, is in a worrisome position with their finances?
Probably not. I mean, they're using credit to bridge the gap. Like things are more expensive, especially if you have children and stuff like that. If they're just using they're leaning on it, they'll dig out, they'll come back. But it is kind of unfair that, they have to lean on it. I mean, they could, there's nothing you can do. I really don't think there's too much you can do about it. I mean, you're not going to trade gaps and all this stuff, but they just got to stay the course. Interest rates will bring it down. Prices will go down. Employment's pretty high. Wages could go up, but that might push on inflation, but at least they could afford it. I wish the wages, the companies would pass on they're making a ton of money. I'm pretty much fiscally conservative in my economics, and they could pass that on. I don't want to be like pushing businesses to do what they could do, but they could, if their workforce makes more money and they buy more things, other people can buy more things, and that's the way it rolls up.
And Phil, overall, what is your outlook for 2023? Do you feel more optimistic about this year going into it, or a little bit more pessimistic, or maybe more of the same?
Optimistic. They got a budget passed, and there's going to be chaos in D.C., which is entertaining, but they're not getting anything done, so I think it'll just be the same. There'll be a lot of good theater, but at the end of the day, they need to buckle down, and there won't be anything on the things that people need now. They put them to the back because it's not exciting. Drug prices, all that's whatever in that big basket of stuff. That's just not exciting. It's not good news, so they're not going to focus on it.
Well, Phil, thank you so much for your time today, and we wish you the best in the new year.
Right on. Thanks, man. Y'all have a great day.
Thank you too. Awesome. Thanks so much.
Hey everybody, this is Thomas Watson, enterprise trucking carrier expert here at FreightWaves, telling you about my show, Loaded and Rolling. Now, it involves trucking topics for large carriers and even small ones that wish to be large. Anything that impacts trucking, you can get it there. You can catch us every Tuesday at 1 p.m. Eastern on tv.freightwaves.com. We do it live.
When guests come to an event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we've brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June. Welcome back to FreightWaves Now. It's time for a final check of weather before we're out of here for your weekend. We've got some pretty heavy snowfall moving up through the central Rockies, looking at impacting Colorado and then eventually into the northern plains by the time we move through the weekend. And let's check it out in Sonar Critical Events. We've got kind of that moisture, that atmospheric river moving on the coast of California to blame for all of this snow setup here. So we get some really intense snowfall around Salt Lake City right now and down into the southeastern corner of Idaho. This is going to continue to move to the east, northeast, and move pretty slowly here these next few days through the I-70 corridor in Colorado, Grand Junction up into Denver. And we're looking at some pretty intense snowfall amounts, specifically around those mountain passes. Could be seeing I-70 shut down in some places here by the time that we're done today. Same thing with I-80 moving through Salt Lake City, Utah, and then up into that southeastern corner of Idaho. We do have winter weather advisories in place for all of those areas. The city of Salt Lake is involved in that. Same thing moving to the eastward. We've got a winter storm warning along that I-80 corridor eastward into Utah, and then down into the central parts of I-70. Snowfall amounts here going to range anywhere between 3 to about 8 inches in some places, so pretty wide ranging in those totals. And again, as usual, highest amounts will be in the highest elevations. It's going to be pretty difficult travel along I-70 once you get into Colorado through the mountain passes. Most of these areas do have chain restrictions in place already for trucks moving through there. So if you're not complying already, you definitely should be here these next few days. And then eventually looking at Denver getting some pretty intense snowfall this evening into tomorrow morning. This snow will hold together pretty well, move up into Nebraska and South Dakota by the time we move into Saturday and Sunday of the weekend. So just be prepared out in those areas, taking a chance to get ready before that snow comes to impact you. That's it for the weather today. We're going to continue to watch the storm affecting the California coast to move throughout the weekend. Right now, we're going to hand things back over to Isaiah for a final check of what's trending on social media.
Welcome into Social Roundabout, everyone. I'm Isaiah Buchanan, and growing up, I always figured by the time I was 25, 26, the age I am now, that we would be living like the Jetsons in flying cars. Well, turns out we're gonna have to settle for cars that can change colors. At the Consumer Electronics Show out in Las Vegas, BMW unveiled this beauty right here. It's called the BMW i Vision D. Now, D is spelled D-E-E, and it stands for Digital Emotional Experience. So this car comes with 240 panels that have the ability to change 32 different colors. So you have an unlimited possibilities of different patterns or styles that you can come for your car. You can change it to fit your mood. You know, if you're upset, you can do matte, or if you're upset, you can do red or any other colors. Sad, you could do blue. So this is a really cool concept car that they have come out with. So the grille and the lights for this car, they're able to show different shapes and hues to give the appearance of different emotions, happiness, sadness, anger, approval, all different kinds of emotions that you can show with the lights on this car. Now, this video doesn't show that, but there are some pictures on BMW's website that you can look at if you want to see those. The interior display can project images of your car's avatar, which you'll get when you buy the car, or if they do come out with it, you get one. They'll be able to project that image onto the screen when you're walking up to your car. The windshield is an actual full display, digital display, so there's no radio up front. Everything is managed directly from the digital display on the windshield. That's to help kind of keep people's eyes more on the road rather than looking around their car and messing with all of the electronics there. And so that car, some of those features for that car, BMW is wanting to actually put into production starting in 2025. So hopefully we'll get to see some of those really cool features coming out here in just a few short years. Now, switching things up just a little bit, you know, cops got to do whatever they can to catch people, catch all the bad guys. You know, they're here to serve and protect. And these cops in this TikTok go the extra mile to make sure they get the guy. Take a look. I would be rubbernecking real hard if that was happening while I was driving by. That's all I have for this edition of the Social Roundabout. Right now, I'm going to toss things over to Bill Priestley for our roundtable.
And welcome into the roundtable. You know, late last year we had a one-on-one with Matt Leffler, and he said that the first issue, perhaps, or maybe the big issue that's going to come up in freight law, if you will, would be non-competes. And sure enough, 5 days into 2023, we get this here as well, as Matt Leffler joins us from Chicago, Illinois, and also joining us here in studio from about 150 yards over my right shoulder, Steve Cox, president of Steam Logistics. Gentlemen, thanks so much for joining us. Matt, first off, good call. And second one, just so everybody's on the same page, what is the FTC proposing here with this rule concerning non-competes?
The FTC is proposing banning non-competes in virtually every single circumstance except for the sale of a business. This will also rescind all existing non-competition agreements signed by people all across the country. There are over 30 million Americans, 1 in 5 workers, that are bound by non-competition agreements. If the FTC proposed rule becomes finalized, those all go away.
And someone who I know has been actively looking forward to this as well. Steve Cox, president of Steam Logistics. I know we've got about 10 and a half minutes on the subject. I'm going to give you one to react to this.
Yes.
What do you think of this development?
I think it's unbelievable for our industry, for our young people in the industry to retain talent in logistics specifically. We see a lot of 22-year-old kids signing things that they don't know they're signing, and a couple years later they want to go after a better opportunity, more money, and to improve themselves, and they can't do that, frankly. And then they have to spend a couple years out of the industry, and they're gone. They're in another industry making a living there, and we never get them back. So talent-wise, we'd love to keep and retain people in logistics. So I love it. Absolutely love it.
Matt, let's turn back to you here. How does this change the playing field in terms of how people can recruit and how individuals obviously get the benefit of this, the fact that they can now move freely about the country, as one commercial likes to say?
We might see one of the largest exoduses of employees from companies they don't like working for, going to all across the country for new organizations that have the opportunity to give them a better opportunity to work with them. Now, that being said, this is not the end of the story. This rule gets finalized. They are going to sue. They will challenge this rule under a whole bunch of different reasons. One maybe being what we talked about earlier last year on the major questions doctrine. Does the FTC have the authority? But here's what I'm going to tell you. This will likely go along party lines of the FTC, 3-2. It will likely become a final rule. And when that happens, watch for the litigation. The Chamber of Commerce and many organizations that depend on non-competition agreements to be competitive in this market will sue. And hopefully they lose. And these non-competes are gone. That is what we've been working for such a long time.
Steve, how do you see this changing the landscape?
I think it's great. I think there are companies out there that don't care about people. They care about people working for them only. Mm-hmm. And I think that companies that don't have non-competition, non-competes, I always say if you find a better opportunity somewhere else, that I would never want to stand in the way of that. So I see that really hurting a few companies out there that have really pushed these things and have bullied former employees into not working anywhere else. So I absolutely love it.
Let me play devil's advocate just a little bit, because I know both of you wanted to see this to happen, and I wanted to see it happen too. But let's just look at the flip side of this just for a second. Does this mean now, let's say, for instance, this kind of reminds me of if this goes through, it reminds me of what's happening in college athletics with the transfer portal and the name, image, and likeness agreement. So basically, a college athlete can move from one school to another, possibly make more money in the process, again, freely sort of their own will. With that, there's this allegation in the college athletics world that the bigger schools are going to get bigger because they've got money, and the smaller schools are going to get smaller because they don't have the money to try and purport that kind of an economy. Does that happen here? Especially in industries that traditionally like non-competes. Matt, are the big ones going to get bigger, or are the smaller ones going to get smaller? Is that a possible effect of this?
I think we'll see some big ones die because their entire business model revolves around frightening people from doing what they're professionally trained to do. There might be some bad adverse outcomes, right? There might be people who join a company and say, I'm going to make my own business. I'm going to go out there and do this. We are seeing, and the FTC has said, that they believe they will see pay rise for people across the country by hundreds of billions of dollars. You will have to pay more for talent. If you cannot coerce your people to stay with you with the threat of a lawsuit, they will leave because your company is awful. And when they leave, they will be able to compete with you directly. And if that happens, you're going to see talent making more money. You're going to see more mobility in the overall workforce of this country, not just in supply chain, but in all the things, because these things are everywhere. They are pervasive. Again, employers want to have their cake and eat it too. At will employment, I can fire you for any reason, but if you leave, even if I fire you, I'm going to force you not to compete with me. It's absurd, and I'm so excited to watch what happens with the FTC over the next couple months.
Steve, do you see any adverse effects with this?
Well, I want to say I might see some positive effects because if you want to go out and start your own business, let's say you're a 5-year employee at a brokerage and you think you have an opportunity to go start your own, it has nothing to do with a non-solicit. That's a whole different story. You're taking your talent. You're not taking customers or your coworkers. You should have an opportunity in this country to go do that. If you want to give it a whirl, you should be able to do that. And I think we might see a heck of a lot of that happening.
Matt, let me turn back to you again. Legally, you kind of already touched on this in terms of, what can happen for especially those that like non-competes and like having that framework in place. What will those fighting this say, obviously, in those suits that are more than likely forthcoming? In other words, upon my notice of leaving a company, will we see, for instance, more disincentives to leave a company for those companies that say, all right, if you do this, if you don't do this exactly by the book, we're going to impose X, Y, Z, that kind of thing?
Yeah, the biggest challenge to this is going to be whether the FTC has statutory authority to make a prohibition and a rescission of all of these contracts. And that will absolutely be litigated at the district courts, the appellate courts, and the Supreme Court. I have no doubt about that. Now, in terms of how you're going to continue to make people stay with you is, oh my gosh, you have to be a better employer. That's going to be really hard for some people. But honestly, that is what we want people to be doing. What I would recommend for all of the viewers today, the comment period has not opened yet. Soon it will. If it opens, I will make sure to talk about this all over the place. Tell your stories. I have dozens and dozens of people over the last few months that have reached out to me privately and said, this has ruined my life. This experience has devastated my family. Those stories need to be told at the federal level so that becomes part of the record. So when this goes out there and is litigated, there is evidence to say these things are bad for everyone.
Yeah, Steve, let's just talk about your experience with this, because obviously you've come out very publicly against non-competes.
Yeah, I mean, same with Matt. I've received so many personal messages on LinkedIn of people that it's crushed them, because there are bullies out there that are willing to come after them. They can't afford to defend themselves, and that's why we've made the commitment at Steam. If you come to Steam and you have a non-compete, we will defend you. So we've had people that have been served personally if they didn't serve us, but we are would defend them if they actually went to court. We haven't had that problem yet, because specifically for us, we haven't had the issue because it's really a court of public opinion issue, and we've said that we will post this on LinkedIn and everything that goes on in court all the way through, and make it very public, and nobody likes it. Customers, carriers, candidates, their own people don't like it. So, we haven't had any issues because nobody wants to sue us, but individuals get sued out there, get scared, and it does. It has real effects on their lives.
Let me switch gears again, slightly talk about maybe a slightly different subject matter. Of course, we have a future supply chain coming up in Cleveland, Ohio next June. We've got F3 coming up again in November. And those kind of conferences, of course, bring a lot of people together from, undoubtedly, rival competition as well. How does this perhaps change the nature of the industry in terms of people saying, hey, you want to come work for us, now that they're no longer any sort of non-compete or any kind of agreement as far as that's concerned? Would you be more concerned about poaching? Would you be more concerned about people making contacts, in these, for instance, conferences where everybody's there and it's basically a free-for-all? Matt?
Go ahead.
I would say this is going to be an exciting time for anybody, especially for workers. If you're a good producer in your company and you know your value, but your value's been made smaller because of the fact that you can't go work at a competitor, you are going to be able to write your own meal ticket. It's going to be spectacular. And even with a non-solicit in place, you go out there and you set up a post and say, hey, I'm over at this amazing company now. If you want to come work with me, give me a call. You have such a great opportunity as a worker in this country if you're not bound by these non-competition agreements. These things came after the Civil War, used to keep people who used to be enslaved still locked into working for an employer. These are bad for everyone. And so many employers have manipulated the legal system to use these in every single circumstance, from sandwich shop people at Jimmy John's to people in the freight brokerage business. They will go and the workers will celebrate.
Steve, what do you think?
What's nice about it for us is that we've never abided by them. So we've always recruited people with non-competes, and we don't have one, so our people can go wherever they want, and that's okay also. So we've worked really hard on our culture as a company to ensure that it's the best opportunity that we can provide people to change their lives. But it makes no difference to us. We've always recruited no matter what.
All right, Matt, you mentioned the comment period coming up. What's the protocol here? How does this move forward?
I want everyone to think of making a public comment at the Federal Register like making a social media post. Tell your story. This will be open for 60 days. You'll be able to comment and talk about what they've done in your life and what you want to see happen. Those stories will be what helps the regulators make the final rule. I expect we'll see some changes, maybe for some C-level or high-level people being able to still be bound by non-competition agreements, but we want the American people to participate in the democracy that we're all a part of. This is a great opportunity for people who are not used to talking about what's happened to them in their private lives in a real public forum to help change the way we regulate entities and how we work with people in this industry.
Well, Matt Leffler, Steve Cox, thanks so much for joining us. It's going to be an exciting time if this thing gets passed as the way it's worded. We will move on as Kaylee has our last set of headlines coming up next.
All right, guys, thank you for that very interesting and informative roundtable. Time for a final check of your top stories this morning. Class 8 truck orders look healthy headed into the new year, according to Daimler CEO John O'Leary. He said that no one was able to satiate the demand seen in 2022, and that will continue into 2023. New bookings slowed in the fourth quarter after a record 53,000 orders in September, but backlogs remain elevated. However, those backlogs will be reduced enough that they won't impact production output for OEMs. O'Leary also said that the supply chain issues are easing, with the company finding more parts than in previous years. Lightning eMotors has released a new product designed to help fleets plan out when to electrify and how to sell their older vehicles. The digital solution will be free and gives recommendations based on fleet operator input from data like route distance, payload, and number of passengers. Fleet planners can also include passenger versus cargo vehicle distinction, terrain type, average weather conditions, dwell time, and shift duration as their inputs. The system will automatically make recommendations on which vehicles to get rid of out of a fleet and when, and then which electric vehicles would be best to replace it with. And U.S. rail traffic in 2022 was down 3% for the year from 2021 as service concerns and economic concerns dominated the market. Carload traffic was flat to slightly lower, down just 0.3% to nearly 12 million carloads, while intermodal volumes fell 4.9% to about 13.4 million containers and trailers. The 5 commodities with the most volume showed no consistent trend year over year, but volumes for coal and non-metallic minerals were both up. Grain volumes dipped 4.2% to 1.1 million carloads for the year. And you can find details of these stories and more up on FreightWaves.com, as well as in our FreightWaves app. If you're watching us on YouTube, give us a like and subscribe. Same thing on all of our social media. For the full FreightWaves TV experience, move on over to tv.freightwaves.com. And we're going to move on over back to the wall for our final carrier update of the morning.
Welcome into this final carrier update of the week. Donnie, it's our lanes of the day. As you left off talking, going to work in the Northeast here to start.
That's where the best rates normally pay. Very congested. Nobody wants to go there. There are niche companies that do it every day that do just fine. But you want to pick up in PA and head up to Boston, almost a 400-mile run, where you're going to get paid $4.23 a mile. This is why. This is why if you're one of those that sticks with us, that you're stuck in with spot market freight, no contracted freight, then these are lanes that you might want to consider because this is where it's going to pay the best. Well above our NTI at 276. The problem is this 400-mile run is probably going to take you all day. So it's not something you probably get there, unload, reload. You're probably going to pick up in the morning, deliver in the afternoon, probably to pick up your backhaul the next morning. But you're coming back out of Boston, headed back to Harrisburg, hit my little double arrows there and swap it over. You're still getting paid $3.28 for a backhaul, and it's starting to pick up here. Now, of course, there's a snowstorm coming in through this area now, so this may push spot rates up a little bit higher as well. But it's always nice to see these backhaul lanes that are well over $3 a mile and starting to increase.
Yeah, because you've talked about it before. I mean, back in the day, you were happy to get $1 or $1.15 to get out of Boston.
Crank the truck with a little handle in the front. But yeah, no, Tony, you're exactly right. I was loving $1.15 coming back, and that's all in. $1.15 getting out of Boston and getting me back to PA. But as soon as I did that, I wanted to get PA and get out of there. But here now it's $3 a mile. That's incredible. Now I'm sure maybe on this one, contracted rates might be a little bit lower, but that's the way it is because you are just trying to get back to PA. Next lane here, start over, next chart.
Your favorite.
You thought I was going to throw this on you the other day, but I didn't. I saw your face when I started to bring it up, when Green Bay up. But Indianapolis head up to Green Bay with a reefer. It's dropped down. It's only at $3.60 a mile. So you see it was over $5.50.
Yeah.
But it's been declining. What's good never really stays good for very long. But if you pick this lane and you run up to Green Bay, this actually might be a lane that you may either want to run on the spot market because it pays $3.60, or if you have a contracted, maybe. But if you reverse this and you go Green Bay coming back to Indianapolis, we'll swap over to the next chart here.
There you go. There it is.
You're at $5 a mile coming back.
Yeah,
and that's a 400-mile run. Still a really good run. You do have to run through Chicago, Milwaukee, so this again probably going to take you all day. But the rates are there, and you can actually stay profitable and have a good truck if you're just running your reefer between Green Bay and Indianapolis.
Yep, this is where keeping an eye on, we can find those rates those lanes that do average above $3 a mile. Well, Donnie, thank you so much for the updates this week. We'll be sure to check in with you again next week. Right now, we'll hand it over to Kaylee and Anthony.
All right, guys, thank you for that update. We are done here for your Friday. A long, short week, Anthony, but we made it.
We made it through, and I'm so happy to have the crew back and be back with everyone here in the studio. And we have tons more content coming up throughout the day. In just about an hour, we're going to have an episode of What the Truck.
Right, Dooner is back, so make sure that you tune in for that. Next week is going to be pretty normal, except we have that virtual event coming up on Thursday. January 12th is the Sales and Marketing Summit, so go ahead and head on over to live.freightwaves.com and get registered for that one if you haven't quite done it yet. Registration is still free, even if you wait until 8:59 on Thursday morning to do so.
And as you mentioned earlier, there is a giveaway that has all of our virtual events. So be sure to get registered, be eligible for that giveaway, get your marketing and networking skills going so you can be all set for our next in-person event.
Rumor has it that giveaway is hot, so make sure that you stay tuned. Thanks, guys. Have a great weekend. We will see you Monday morning.